Hi, I'm Sam Hawley, coming to you from Gadigal land. This is ABC News Daily. Inflation is coming down, but the Reserve Bank has raised rates again. So what's going on? And when will the prices of everything from food to rent return to normal? Today, business reporter Nassim Hardem on why that's going to take a while yet.
We do have an announcement, David.
Well, Ros, the cash rate has increased by 0.25 percentage point. It's, I guess, a very surprising outcome of this meeting. Markets were attaching a very low probability of this happening.
Wow, I mean, no one really saw this coming, did they? It was thought that the RBA would pause rates for a second month in a row, but it's actually put them up again.
That's right. I mean, most economists were actually forecasting a pause. Some did forecast a 0.25% hike, but most hadn't. And financial markets, of course, didn't expect this. So it has been a big shock to everybody.
Yeah, really a real shock for many people and not a very nice one. Now, I want to talk soon with you more about this rate rise and the inflationary pressures that we're seeing at the moment. But first, can we discuss how expensive it is to go to the supermarket right now? It feels like it just keeps getting worse. The weekly shop is just getting more and more expensive.
Oh, it really is. There wouldn't really be many people in Australia who aren't noticing this now. I mean, I've become quite the little bargain hunter myself now.
Yes.
I'm trying to save on fresh food, especially I go to a local fruit market now instead of the supermarket to just get fresher and cheaper fruit and veg.
Just about everyone's feeling the strain as prices continue to spiral upwards.
The cost of food, housing and other essentials is still rising quickly.
I mean, the prices of some things are just out of control. So some of the main staples in Australian grocery baskets have had their sharpest price increases in decades over the past year.
At checkouts around Australia, bread prices rose 12% last year, while meat prices jumped 4% and milk and cheese increased by 15%.
And this is really due to increased production costs, especially high fuel costs.
Okay, so what products, Nassim, are we really paying a lot more for?
Yeah, so there's price rises across the board, but milk, cheese and yogurt have gone up almost 15% since the same time last year, due in part to increased production costs. Price increases for drinking milk and cheeses until recently kept relatively low inflation, but they're now at their highest level in decades. There's also been strong prices since Christmas for this category called not elsewhere classified, and this includes things like tea, coffee, frozen pre-prepared meals and health supplements. So this category was up 12% on the same time last year and up more than 3% since December. And then the cost of food production has also meant that things that normally people turn to because they're a bit cheaper, like takeaway meals, has actually gone up. So takeaway meals and eating out has gone up, jumping 7%.
Yeah, wow, it's a lot. I mean, I noticed the cheese, that's for sure. And I'm sure lots of Australians do because we're big consumers of cheese. But even bread, my gosh, bread's expensive at the moment.
That's right. These are our most basic items that we have in our baskets every week that have gone up massively.
Yeah, and you put them all together, so you've got the whole trolley full. How much extra are we actually paying in the end?
So the latest ABS data shows that overall food prices rose 8% in the past quarter. Now that's down slightly from an increase of 9.2% in December, but it's still historically really high.
Okay, so Nassim, we are paying so much more because inflation is really high at the moment. Dairy products cost more because I guess the price of fertiliser's gone up, the feed has gone up, packing costs have gone up. It's all because of inflation. But I thought inflation had started to come down.
New inflation data provides further evidence that inflation has passed its peak and is now moderating in our economy.
So when will the cost of food start to do the same?
That's the $1 million question, right? There are some positive signs. Australia's inflation rate has fallen from its peak in December of 7.8%, and then in the last quarter that rate was down to 7%.
The worst of the inflationary pressures are behind us, but they will hang around higher than we'd like for longer than we'd like. While inflation is still unacceptably high, we do welcome the fact that some of these price pressures in our economy have started to ease.
So it's showing you that's started to flow through to some goods. And it's showing us basically that the RBA's aggressive rate hikes are starting to have an impact. People are pulling back spending. The thing to remember is within that inflation figure, there are two components. So there's the goods, which we've been talking about, and there's also services. And the costs of goods are no longer just the problem. The cost of services is now also causing the inflation rate to stay really high.
Okay, so let's look at that. The inflation rate is now sitting at 7%, down from 7.8% at its peak late last year. That's still really high because the target rate set by the RBA, we know, is between 2 and 3%, so we're a long way from that. But what you're saying is that services are now a really big problem. How is that?
The key thing to remember about inflation as well is it's a basket of goods overall, and that overall inflation figure doesn't reflect individual price fluctuations of all goods and services. So prices actually went down on some items like furniture, household appliances and clothing, but they still went up for most items, although the rate at which they've gone up has slowed. When we look at non-discretionary goods and services, so these are the things that people consider essential, these are goods and services that are purchased because they meet a basic need like food, shelter, healthcare, or they're required to maintain a current living arrangement like your car maintenance, your school fees. The ABS says these non-discretionary goods actually rose 7.2% through the year and by 1.9% in the March quarter. The biggest rises were on things like tertiary education, medical services and gas and other household fuels. And unlike the costs of, cheese and those kinds of things, those higher prices might actually stick around for longer.
Right, so it's those services and the increases in costs in those service sectors that are really putting extra pressure on inflation. And on top of that, Nassim, we have record immigration at the moment. 400,000 people will enter Australia this year. And as I read it, that's really inflationary too.
That's right. This is something that the RBA has actually been warning about. And if it's logical to assume that if you have a surge of new migrants and students, they're obviously coming in and they're competing for housing. And a big problem we actually face at the moment isn't just the cost of housing, but it's the high rents. That's very inflationary as well. Core Logic data shows that national median rents climbed from $440 per week in January 2020 to $577 per week in April this year. So this is making rental really unaffordable, and it's actually sparked calls for the government to build more affordable housing, especially subsidised community housing.
Everyone good? Today the Reserve Bank has lifted interest rates by 0.25%. This is a really difficult decision for a lot of Australians who are already under the pump. This is a reminder that inflation remains the primary challenge in our economy.
So, Nassim, the Reserve Bank, it's trying to get inflation back down to that 2 to 3% target. It's raised rates again after a month's pause. So is what it's done so far, repeatedly increasing rates, is that just not working? Is it not doing what they want it to do?
It's a sign that the RBA is really worried about inflation. It hasn't obviously seen what it wanted to see in terms of that inflation rate. You know, I talked about the rental increases, but also house prices have increased. And, you know, a lot of analysts are saying that this actually could be the rebound in housing now. You've probably seen the market really bottom out. Houses are selling faster now. So it really wants to tackle this inflation problem. The thing to remember, there is a lag in the RBA going so aggressively and the effect that has on spending. And the full effect wouldn't have been felt by many people yet, particularly if they're on a fixed loan and they're about to come off that. Many Australians are facing a mortgage cliff because once they come off those fixed loans, as many will in the months ahead if they haven't already, they will face the equivalent of 6 rate hikes all at once, and that could have a huge impact on spending. But the RBA just thinks that enough hasn't been done to bring inflation under control.
Okay, Nassim, so there are still these really big inflationary pressures. Is the Reserve Bank, because of that, going to keep raising rates like this? It's becoming so hard for so many people. Can it keep going in this direction?
Look, it may very well need to move again if inflation doesn't come under control, but we also need to balance this with the risk it has on tipping people over the edge, right? If they go too harsh, that could push a lot of people into mortgage defaults. That is, that they have to, they can't make their loan repayments and they'll have to sell their homes. But if I can throw forward a bit to next year, what I would say is that at the start of this year, most economists were predicting rate cuts either later this year or early next. It's still too soon, obviously, to talk about rate cuts because inflation is still a big problem. But many economists do actually think that, the story from here might be that the RBA actually now waits and sees the impact of the rate rises, or at least they're hoping that the RBA will now pause and not keep hiking. They're hoping that, this inflation problem will be brought under control.
Well, let's hope so. And in the meantime, let's both avoid the cheese aisle in the supermarket, Nassim.
Definitely. I've avoided the cheese aisle for some time now anyway. I think it's not good for the hips.
Thanks, Nassim.
Thank you.
Nassim Hardem is a business reporter for the ABC. The Reserve Bank of Australia is about to undergo an overhaul. We covered that on April the 21st. Look for the big shake-up of the Reserve Bank in your feed. This episode was produced by Veronica Aphab, Flint Duxfield and Sam Dunn, who also did the mix. Our supervising producer is Stephen Smiley. I'm Sam Hawley. To get in touch with the team, please email us on ABC News Daily at abc.net.au. Thanks for listening.
You've been listening to an ABC podcast. Discover more great ABC podcasts, live radio, and exclusives on the ABC Listen app.